It's still unclear if there will be a regime change in Zimbabwe. Analysts say it was a clever move not to call it a coup.
If you call it a coup d'etat, the likely reaction from SADC is going to be that the government that emerges out of that process is not going to be recognized. Membership of the country is going to be suspended from SADC. The membership in the African Union is going to be suspended. And in terms of the recognition, the legitimacy of the government that carried out the coup, it's going to be in question, which is going to make for a difficult start.
Despite a slight decline, trade between South Africa and Zimbabwe remains strong. Between January and August this year, South Africa exported $1.5 billion worth of goods to the country. Imports from Zimbabwe totaled $1.4 billion.
The impact on trade would not be immediately from the political movement, apart from the fact that investors and travelers would be hesitant to go into a country that is perceived to be politically unstable. But I don't see that translating immediately to economic sanctions or trade sanctions because of a change in government of that nature.
There's been little reaction on the JSE or in the South African currency as investors wait for more clarity on President Robert Mugabe.
Any kind of regime change that follows after Robert Mugabe reign should lead to an increase in investment. From two perspectives. Number one, I think that the economy has hit a place where it is longing, for a change. The population, the people are longing for a change. I think they have hit rock bottom. They have hit the lowest that they go in terms of an economic perspective. So, any sensible government which is going to be would come in place would understand the importance of putting the economy on a different path towards growth and development. And that necessarily comes with an inflow and an increase in investment.
It's now a wait-and-see approach. South African businesses in Zimbabwe are nervous but are not pulling out. And many believe they will be well-positioned for growth should there be a leadership change. Sumitra Nydoo, CGTN, Johannesburg, South Africa.
So let's get the latest details on exactly how this political standoff is affecting Zimbabwe's economy. Persistence Gwanyaya is an economic and financial analyst who joins us now live from the Zimbabwean capital, Harare. Thank you for your time this evening, sir. What effect, if any, is this political standoff having on the economy, on daily trade and investment flows into the country?
Thank you. I think the situation in Zimbabwe has been so far managed very peacefully. It has been business as usual. People have been going to work. Businesses were operating as usual. But what is important is that the army has actually reiterated that they are going to manage the process peacefully, and their intention is not to take over power from the government, but to pacify what could be the political, economic, and social turmoil in the country. And that would be very important as it brings confidence into the economy if the whole process is managed well until the end. So what is also important from the pronouncement that came out of the army is that the intention is to improve the business environment, the investment environment, with the concomitant effect of increasing production, which seems to be a missing link in the economy today.
Right, so the military won't be in charge forever, but historically Zimbabwe once had a government of national unity, putting ZANU-PF and MDC in a shotgun marriage of sorts. What are the legal options now for setting up a transitional government ahead of elections?
The government of national unity is a possibility. In actual fact, it is one of the possibilities that is mostly talked about by different groups of people today. It is not new to Zimbabwe. We have been in this government of national unity from 2009 to 2013. But what is important to note is that for a government of national unity to be formed, there should be an amendment to the Constitution, specifically Section 158 of the Constitution that requires the country to hold elections after every 5 years. Because formation of a government of national unity would mean that we postpone our elections. And also important is that the government of national unity would ordinarily have to draw members from those who are currently not members of the parliament so as to be more representative. So there should be that provision for a government of national unity to be made out of those members and amendments. Importantly, if we reflect on the previous government of national unity, you would note that there were some significant strides that were recorded in the economy. GDP in Zimbabwe managed to grow by an average of more than 10% during the period of government of national unity. Inflation was managed below 5% from a high of 200, official figure, 231 million that was recorded on the 31st of July 2008. Capacity utilization managed to grow from below 10% to above or around 30%. So those were the advantages that we got out of the government of national unity. And importantly, the confidence level were actually boosted by the government of national unity, and that saw the economy improving.
Right, we'll leave it there for the time being. Thank you very much for your insights there. Persistence Gwanyaya, an economic and financial analyst, joining us there live from the Zimbabwean capital, Harare. Of course, we'll be keeping a very close eye on developments in the Southern African economy.